Hello, Mike Swanson of WallStreetWindow.com here. Hello, Mike Swanson of WallStreetWindow.com here. Decided to do this video Sunday at 5 o'clock because in 1 hour, futures are going to start to trade for Bitcoin for the very first time. Some people are calling this the most significant event in financial markets this year. There are people out there that are actually saying this may be one of the most significant events in the entire history of the financial markets with the emergence of Bitcoin. I don't agree with that at all. And I don't really think Bitcoin is like going to change the world or even change the way that you or I use money. I think we're going to still be using dollars and currency and so forth. But forget about that. It's the trading that's really what is capturing people's attention with Bitcoin. And there's a lot of people brand new to trading and investing because of Bitcoin. And that in a lot of ways, that's a very good thing. Although there's a big potential downside to that. And that's that the people that are new to trading this stuff don't really understand what they're doing. They're just grasping on to people making wild predictions that Bitcoin's going to go to 1 million or whatever, and just think they're going to get rich without any real strategy of when they're going to get in and out. And there's some data that the futures market is going to give us that's going to give us an idea, a better feeling for what is actually transpiring inside of the Bitcoin market itself among the so-called smart money and lesser so. And I'm going to show that with gold in what the futures data is showing us that's happening with gold right now, because I think there's actually a very significant turning point in this week that's going to occur with gold and mining stocks. I really think if there's 1 week this year that's the time to be buying gold or mining stocks, it's actually this week. I'm going to show you why in this video. But first, we have got to talk about what's going on with Bitcoin today. So let me very quickly here load up the Bitcoin trading chart. There we are. And you can see what I'm actually looking at. So this is Bitcoin at the moment. It's down 1% today, down $166. And I'm curious to see myself what is going to happen when an hour from now when the futures start to trade. I'm not really expecting anything too crazy to take place, but you're looking at a 3-month chart. This is a 1-day chart, and we're fading a little bit going into 6 o'clock. We can snap here to a weekly chart, and Bitcoin approached the $20,000 an ounce level and came back. Now, I am someone that believes Bitcoin is going to ultimately crash next year and wipe people out. But I also think it can go up higher than that beforehand. Even, I don't know how high, but I do think we could see a big Bitcoin rally next year. And what is going on is when I look at historic comparisons to past massive rallies, like, okay, this is Bitcoin all the way going back, and you see the price has gone absolutely straight up. Well, that is a rare event for any financial market, but we can look at history to give us an idea of what that means and what's likely to happen next. Now, I know there's so many people out there with these predictions or claims that Bitcoin is like going to change the world. It's going to do this and do that. I heard such claims made about the internet back in 1999, and it was true. The internet has changed culture. It has, and so to speak, changed the world. But there were internet stocks back then that went to the moon and then went to zero and collapsed. So there was some truth to what people were saying, but the chasing of skyrocketing prices, when that momentum stopped, it turned into disaster. And I think that's ultimately what is going to be the story with Bitcoin. And again, if we look at historical comparisons, one, if you are new to financial history, look up tulip mania. just type that in, you read the Wikipedia entry, and I think this is a good comparison really to what's going on today. In the 1600s, tulips went up to be hours a tulip. I mean, I know that may sound crazy, but then the prices went to practically zero. And you look at this price chart is very similar to what we've experienced in Bitcoin so far. And another two, which is more recent, is silver. In 1980, the price of silver skyrocketed and then crashed. And there was a day called Silver Thursday on March 27, 1980, in which the price of silver crashed in a single day. But it did that after running up in a parabolic, explosive rally. I want you to know, I don't own any Bitcoins. I don't own any cryptocurrencies right now. I'm not shorting them, not betting against them. However, if they do a run up like silver did in 1980, or something like the tulips did the last couple months, there's a good chance I'll be betting against Bitcoin. Now, again, I want to reiterate, there are a lot of people new to trading the financial markets for the very first time through Bitcoin. Bitcoin is really the first thing they've ever bought, ever traded. A lot of these people are making some money on that and getting extremely excited. If you look on Facebook, you're probably seeing this type of thing. And since Thanksgiving, 300,000 accounts have been opened up at Coinbase to buy Bitcoin or other cryptocurrencies. That's a sign of a mania. I've looked at search traffic data, and the number of people interested in these things in Bitcoin, typing that into Google search, has doubled in November from where it was before, which already was an increasing level. But to double something like that is an incredible cultural event. I've never witnessed that before in the financial markets, except during the crash of 2008. So that's the mass impact that's going on, and you're seeing everyone talk about it. And again, I'll say, read about the tulip mania, learn from financial history, forget about the technology of blockchain, currency transactions, and this and that. It's obvious from anyone looking at the chart that the price is going straight up. That's not really normal for any market, and it's not really sustainable. That does not mean I think it's topping out today. I think it can go up more next year. But the futures trading today, they paved the way for creating exchange-traded funds, which will make it easier for anybody with a brokerage account to move in and out of Bitcoin with a significant amount of money. The thing is that these 300,000 new accounts open up, and just accounts in general being used to trade cryptocurrencies, the average person doing this is only doing it $20. So what we're witnessing are very small accounts all over the world being opened up to buy. And one thing that is interesting about Bitcoin and the cryptocurrency thing is most of these trading things that are going on, people are doing through their phone, through apps. So the telephone, the mobile phone and the app and the games are really the key to getting people involved in this. 20 years ago, people weren't trading with computers. They would write down and plot out charts every single day to get the idea of price trends. Computers, popularized trading in the 1990s, but now it's the cell phone. But when there are computers, that's when, in the 90s, is when I got into the trading world, and I was using trading software to analyze charts, to analyze trends, things like TC2000, price history. People were really researching things. With Bitcoin, frankly, most of the people are just looking at an app. They're not looking at charts. They're just looking at what it's doing on a daily basis. So that's a unique situation. What also is unique is that it's a global phenomenon. Bitcoin and the other cryptocurrencies are easily traded, easily bought and sold all over the world. You can be in a village in Africa and be doing this with $10, opening up an account. To trade stocks, you need hundreds of dollars if not thousands, to really do it efficiently. So that's something unique and probably maybe unparalleled in financial history, which makes this a global bubble. However, one of the claims people are making about Bitcoin is that it's not manipulated and it represents some sort of freedom from manipulation from central banks or large pools of money in the financial markets. The assertion that these people make is that the stock market, gold, currencies are easily manipulated. Bitcoin isn't. So Bitcoin, buy that, and it can go up without anyone ever stopping it. This is a false assertion. And I'm going to show you why in another screenshot. And it's very important. So here's the price. But here's a story that came out on Bloomberg with shocking details here. 1,000 people own 40% of the market in Bitcoin. That's an incredible concentration of ownership, a control block, essentially. And silver prices went up in 1980 because someone cornered the silver market or attempted to do so. There is close to a corner on the Bitcoin market, and that gives these 1,000 people the ability to manipulate prices, and they frankly could be doing that now. They could have all gotten together and told each other, let's just not sell for a couple months to a certain date or a certain price, and we'll know that all the masses in the world, their $20, $50, $100 accounts, are going to buy because the price is going up and it's a mania, and we'll just wait and just dump or start to dump in a couple months or weeks. So this Bitcoin is going to, I think, end up being a story of massive manipulation, even if the cryptocurrency player is saying the opposite right now. And was the story that came out on Silver Thursday. No one cared about the rising silver prices. No one cared about it or said it was manipulation until Silver Thursday hit. So I know someone watching this that's into Bitcoin, into the cryptocurrencies, may not like what I'm saying. However, I will tell such a person that I do think these things can go higher. I'm not saying they're going to crash now. What I'm saying is they're incredibly risky, and they will likely crash one day. And I'm preparing myself to bet against them at some point in the future. Now, let's talk about futures in more detail. Again, a lot of people are totally new. They don't even know what a futures contract is. Someone that's bought Bitcoin using their phone app for $50, it's the first time they've ever bought anything in the financial markets. They don't know they have very little education about what's going on. And that's also a symptom of total manias, where you get the masses that are doing things for the first time, unaware of what they're getting into. So a futures contract gives you it's illegal. It's something you can buy and sell on the exchanges, but it's basically a contract to deliver a good. We'll just say silver. So if you buy a futures contract, you are saying, I will deliver X amount of silver on a certain date at a certain price. So if you buy the contract and the price goes up, you will obviously make money. If you buy the contract and the price goes down, you'll lose money. Of course, most of the time people aren't physically delivering the silver. They exercise the contracts. Money is taken in and out of their brokerage account, and the contracts can be sold way ahead of time. What is important, though, about futures is they provide tremendous leverage. People in the options market, it's basically 10-to-1 leverage. And most futures contracts represent 100-to-1 leverage, meaning for every $1, you're controlling $100 worth of the asset. Now, when you do this, the brokers force you to put down what they call margin, which is a percentage of cash. That's the value of the complete total contract. Thankfully, with these coming Bitcoin futures, most brokers are going to demand very high margins. I saw the founder of Interactive Brokers last week say we're going to require people to put up 50% margin because we know they're just going to get over their heads. This thing is so volatile, moving up 10%, 20% at a time, that if people go on 100 to 1 leverage on this, they're going to wipe out. They just are. So they're trying to protect people from going too crazy on this. But I think the more important thing is that it paves the way for the possibility of ETFs coming out pretty quickly. There's probably going to be a race for that to happen, but it's also going to give us other data to look at what's going on with Bitcoin in general, with the pools of money trading these futures contracts. And this is information that I look at when it comes to other commodities, and there's something very significant going on this week in gold. So I'm going to show you gold and these reports, and it'll give you an idea what we can be looking at with Bitcoin. But something huge is happening with gold right now. So again, let me open up my little window here. Well, give me a second. I got to you the right thing here. So the government, there's a U.S. Commodity Futures Trading Commission, and they release something called Commitment of Traders reports just about every single week. And what they do, if you go to the website cftc.gov, you can find these reports. And what they do is break down who is buying and selling these futures. So, for example, if you look at the agriculture report, they tell us that there's merchants. We're looking at wheat, and they got merchants and dealers trading these futures. And they use the futures market basically to hedge positions. And they aren't speculating. They're using this to protect their own operation. So say you're growing wheat and you want to lock in the prices, whatever they're selling at, in case they're going to drop, and protect, it's just good business, whatever. So they'll use the commercials market to sell or short and lock in the price. You also have managed money, which typically is hedge funds, and then other reportables, which are small traders, the masses, so to speak. What's important about this is that at turning points in the markets, the large producers, merchants, and dealers, they tend to be correct. And they tend to also almost always be short. So if they go long something, it means they think there's a critical long-term price bottom being put in. But the masses tend to be wrong at turning points. When a market's topping out, they tend to be fully invested. And at bottoms, they can even be shorting it. So with gold, something very interesting has happened in the latest Commitment of Traders report. They closed out gold commercial traders. This report's combining the commercials and the merchants. They closed out close to 41,000 of their short contracts and went long 15,678 contracts. This means that this is a bullish development in the gold price trend, because the smart money, the large money, the mining companies, the dealers are liquidating shorts and going long. This isn't an exact price prediction or time device to the day. The reports are delayed. They come out on Fridays, and they're based on the information of the preceding 5 trading sessions as of the previous Tuesday. That's why on this report we're seeing December the 5th, even though today is December the 10th. But this is a bullish development for gold. And this is very important because when it comes to gold prices this year, I can tell you they're basically sideways. Gold mining stocks are basically sideways. And this sideways action is following a massive rally that took place in mining stocks last year, which the GDX Gold Stock ETF, which I do own a position, went up approximately 100% from the low it made in the first quarter. But this year it's gone sideways. During this sideways move, though, sentiment among the masses, if you look at articles and emails I read and whatnot, talking people on TV, has been extremely negative, extremely bearish. In fact, there's people that are calling for a crash in gold prices, a meltdown in mining stocks. Really what's happened is that, as you can see from this chart, there's a significant top made in gold above 1900 in 2011, and gold went down below 1050 5 years later in a very vicious bear market in terms of price and time. A 5-year bear market is a long bear market in which there are many false rallies and tricks and traps that cause many people to lose money. And that experience has scared so many people from ever wanting to get involved in gold again, and has contributed to the incredible bearish sentiment right now. Prices create sentiment. That's why right now, when it comes to Bitcoin, everybody just about is optimistic. Everyone thinks it's going to go up. The higher Bitcoin goes up, the more people want to buy it, the more people rush to buy it, until finally there's going to be no one left, and it's going to completely crash and bring a massive wipeout next year to the Bitcoin player. It's just the way markets work. But when markets fall and decline, they create the opposite effect, where the longer something goes without going up, the less people want to buy it. So as an investor, how do you deal with that? Well, obviously, the best times to buy something are when people are negative and when people are bearish. Short-term trading is one thing, something can go up or down any given day, any given week, any given month. You have counter trend rallies in bear markets and in corrections and in bull markets that are temporary in effect. But when it comes to long-term positioning, when people are bearish on something, that's when you want to be looking for a change in the trend to the upside. And when you see everyone bearish and so many people calling for price crashes on something like gold and bullish developments in the Commitment of Traders report, then you got to tell yourself, okay, it's not time to be selling. It's not time to get caught up in that negative sentiment. It's time to think about buying, not selling. Well, let's look at GDX, the gold stock ETF. It's been in a range this year with support around $21, hit that 3 times, and it's approached that level last week. And every time it's done that so far this year, it's bottomed out. And resistance is somewhere in the $24 to $25 range. And to change this sideways pattern, obviously GDX needs to either close below 21 and then fall through 20 or something, or break through the $24, $25 barrier. That will create a shift in psychology, and rising prices through 24, 25 will finally cause people to stop thinking about the memories of the last bear market and think about these rising prices and scramble to get on board. And we will see people start to want to get involved in gold, like so many are trying to or are getting involved in Bitcoin. Now, one of my favorite indicators for gold and mining stocks is the GDX divided by GLD ratio. It's on the bottom of this chart. GDX is the gold stock ETF. GLD is a fund that invests in gold. But to make a long story short, this ratio is basically going sideways. What it's measuring is the performance of the stocks versus gold. When the gold stocks are performing better than gold, this ratio goes up. When they're performing worse than gold, the ratio goes down. It's been going basically sideways this year, so there's no real significant thing going on. But I can tell you, when this ratio goes up, it's very bullish because the gold stocks lead the metal when that happens. When the ratio is going down, that's basically bearish for gold and the mining stocks. As you can see on this chart, it did that last year. Now, let's just step back for a minute, though. And one of the key things about investing is to think in terms of cycles, which means time frames, and to figure out what to do in any given market. When it comes to gold or any market, there's 2 main cycles I look at, and this should be applied to Bitcoin too, also. So the first cycle is a yearly cycle. Most cycles last between 3 to 5 years, bull or bear cycles. The stock market's bull market's been going on since 2009, so that's a rarity, but typically 3 to 5 years. And we had a very vicious bear market in gold from 2011 to the low of 2016, 5 years. We then began a bull cycle, and we're in year 2 of that, even if most people aren't bullish. But when you have the start of a bull market, typically the first year after such a pronounced bear market leads to very fast gains in a very short amount of time, which is exactly what we saw. Gold went up 40%. Basically, the gold stocks doubled. But when you get such a sharp move like that in the first year of a bull market, you then end up going into a sideways consolidation period, typically lasting anywhere from 3 to 9 months. This one has gone longer than the historical norm, but that's just what's been going on. And then you finally break out of that, and then the second wave of the bull market begins, which lasts for years. So I think that's where we're at. GDX needs to go through that barrier for that to begin, and gold needs to get really basically through 1350 for that to begin. But I think this is a good week to be buying because we're near support, and we could easily be turning up by Friday. And if we turn up by Friday like we did the other times that GDX hit 21, then we're going to be sitting here watching a rally back up to resistance, the 24-25 zone, and seeing if we're going to break through it to lead to the start of the next big bull market. I think we are next year, and that's why I think this is like, the buy point. I mean, I can't, I don't really think in terms of predicting prices like, oh, buy at 21 or buy at 20 and a half. Maybe we break 21 and dip to 20.75 or something, and that's the exact bottom. And we're going to go to 35 on the GX next year. Nobody can predict exact price points like that of bottoms and where things are going to top out. That's why so many of these predictions about Bitcoin going to 1 million or 50,000 or 30,000, they're totally useless when it comes to making money. What's important is to analyze the trends and when the trends change. So in the context of gold being in a cyclical bull market, and this being year 2, the second trend that's so critical and important to us is the daily trend, which is really what I'm talking about now, the daily or weekly trend. When the weekly trend, we'll just stick to that, shifts up, then we're going into another rally in the context of the 3 to 5 year bull market trend. We're in a consolidation phase right now. If we end that, it's going to lead to extremely bullish developments. So that's what I look at. What I ask myself, what's the overall trend, the cyclical 3 to 5 year trend, and then what's the daily trend going on in context with that to find my entry points or possible exit points. How do we use this when it comes to Bitcoin? Well, we've got this commitment to traders report that's helping me identify that gold is not in a crash situation. If it was in a crash situation, then we would not be seeing the commercials closing out short positions and building up long positions. They just wouldn't be doing that. So that tells me the crash predictors are wrong, and I should be buying. We can use this sort of data when the Bitcoin futures start to trade too, to figure out, are we seeing commercials, the biggest players of Bitcoin with the most money get out? Are they shorting Bitcoin to bet against it? What are they doing? Because in the end, the guys with $20 Bitcoin accounts and $50 Bitcoin accounts, they are not going to control the Bitcoin market. Right now, they are. It's a little bit of a paradox, but right now, this is a market that's being pushed by small traders because it's these people that open up the 300,000 Bitcoin accounts for the very first time since Thanksgiving that are putting the money in that's causing the prices to go up. But in reality, these 1,000 people that own 40% of the market, when they act, the whole market is going to change and become a different animal. So it's a strange situation that's rare in any financial market where the small fry is in control, but he is right now. But he doesn't have the ability to maintain that control, and it can be taken at whim when the real large players of the market begin to act. And when they do, that could easily begin to show up in the commitment of traders report, because I can tell you that if I was somebody that had millions, $100 million in Bitcoin, I would not really be wanting to just dump that on the market overnight. But what I could do is use the futures market to begin to hedge that position quietly and secretly, because for the most part, the activity in the futures market is not going to have a direct price effect on the Bitcoin price itself as being traded on Coinbase and all these other exchanges. It's going to be the perfect hedging mechanism. Isn't it funny too that as Bitcoin goes through a parabolic blast off, the futures market opens up, that's going to give these type of people with the high degree of sophistication, the high degree of contacts with their brokers and whatever, to use the futures market to start to hedge their positions. The reality is someone that's got an E-Trade account, Ameritrade account, whatever account, they may not even be allowed to play with this futures market, much less short it. The guy on Ameritrade said he's not going to allow shorting. But if you're got $100 million, you're running a hedge fund, if you're a billionaire, you're going to have the contacts to contact the right broker and be allowed to short Bitcoin using the futures market. The masses know. So this is going to be an interesting mechanism that's going to be used, and we're going to see if the big money starts to hedge these Bitcoin positions. It's going to tell us a lot. So interesting things going on, and that we're going to be able to study together in the coming weeks. Just want to close with two main points. Reiterate once again, so many people have given up on gold because of the sideways action. There's people betting on gold crashes. I think this is a good week to buy. By the end of the week, I think we're going to be going back up. So that's the way I see it. Secondly, last week with my own money, and with my own money, I took 20% of my money, so one-fifth of my money, and I bought a core investment position in exchange traded fund. And this has nothing to do with gold. It's nothing to do with the stock market. It's nothing to do even with commodities, but it's now a core investment position in a trend that I think is starting to develop and is going to last for 3 to 5 years. And on Sunday, I did a full report on this investment, why I bought it. I basically have a 1-point stop loss order on it, and I think it can go up 100% within 3 years. So that's the type of situations I look at. I'm not really interested in buying Bitcoin. To me, it's very speculative. Yes, Bitcoin may double here, it may triple here. I really don't know. Quadruple, I don't know. But the risk is also 100% loss or 90% loss, because there's no underlying asset there. Bitcoin pays no dividends. You can't hold it in your hand. It's just speculative mania, much like those eToys was and other internet stocks or tulips. And if you think, oh, don't say that, you're doubting the crypto chain and the blockchain. Well, okay, there's like 5,000 other cryptocurrencies being created. If you believe cryptocurrencies are real, what's to stop another one from replacing Bitcoin? I see nothing special about it. It doesn't matter. Anyway, it's the historical price comparison that does. And we know what that means. And we can use this commitment of traders report to see if big players are going to bet against it. And it's going to be very informative information. So, but the point of what I'm saying that is I'm not interested in risking 50% or 90% of my money buying Bitcoin today to hope I triple it. I'm just not into that. I mean, it may happen. It could pay off for people, whatever. But I'm more interested in buying something where I can put a 1-point stop loss order on it. Essentially on this position is like 5%. And I'm looking to double that money. So I'm risking $1 to make 4. I mean, yes, it's over 3 years, but it's providing a big, huge diversification of my account. Again, nothing to do with the stock market. I'm not shorting the stock market with these positions. Have nothing to do with gold. They've got nothing to do with gold stocks. They have nothing to do with commodities. But the report's been written about it. And if you want to get this report, go below and get into my private group. my private power investor group. The information to do that's below the blog post on my website, where I posted this video, and you'll start to get my weekly research reports and updates. The other week I did a complete report on Bitcoin. I've even got a top 10 list of stocks that's updated in these reports, and I've even got stocks that have a lot to do with Bitcoin and blockchain, because I think this can continue to go up and benefit these stocks. So even though I've said lots of negative things about Bitcoin, I'm really speaking about the long-term trend. What's right ahead of us, it's a different story. This is the middle of a mania. That's just what it is. So get into my private group. Go below the video, click to the page, and get in and get started. And I'll see you on the other side.